Welcome to my weekly outlook with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, again, moving into this week, we've had all these to's and fro's from the trade dispute between US and China driving market sentiment. We saw on Friday Donald Trump suggesting that 100 billion worth of Chinese trade goods were going to be impacted by tariffs, and now we've seen him sort of, I suppose, rolling back a little bit to a certain extent, and the fact that he's sort of suggesting that there's a degree of friendship between the two countries, and that compromise is probably the best solution. And subsequently, I think the market sentiment has picked up on the back of that. Now, this has sort of been a back and forth on market sentiment for weeks now around this trade dispute issue. And for now, it seems as though that the markets are fairly coming towards the conclusion that there's going to be some sort of agreement between the two that will avert an all-out trade war, which according to the official lines, seems to be the direction of flow at the moment, but certainly unofficially, it doesn't seem to be that way inclined. Now, subsequently, what we are seeing is the markets reacting less and less to the daily sort of back and forth, and we certainly see forex markets, for example, increasingly range-bound euro-dollar not going anywhere, and we're seeing the gold price again chopping higher and lower, but not really showing any real trend. So this seems to be the case coming into this week. Now, we've got inflation data for the US this week. Now, inflation in the States is going to continue to, I think, be the key factor of 2018, whether the US generates inflation or not. Now, we've got the CPI data this week, expected to actually, on the core basis, improve from 1.8 to 2.1%, so a big jump actually in the inflation data. And what we are likely to see, if that is the case, is that we could start to see treasury yields rising again. Now, the big thing at the moment is the fact that treasury yields have been sort of stuck in a bit of range ever since we've had the Fed rate hike. So we've not really seen too much traction from that rate hike in the States, and subsequently we've not really seen too much movement really in the dollar. But if we do start to see inflation picking up demonstrably in the States, then we could start to see some sort of traction in a bit of a dollar rally. But at the moment, as you can see on this chart, it certainly seems as though that 90.5 towards 91 on dollar index is a bit of a resistance area in 2018. Will this again be used as a chance to sell? Will inflation actually pick up, or will it once more disappoint and miss the forecasts? So that is the key factor through the middle of this week. That's on Wednesday, but certainly the sort of mood music will again be taken by these trade flows. The trade disputes issue that continues to rumble on. So where are we looking at forex markets? Well, as I said, euro-dollar basically going nowhere at the moment. It's not really breaking down. It's sort of had a bit of a go of an uptrend, of the 12-month uptrend, tested that. I suppose you could argue just hung on, but still is testing that. And I think moreover than that, I think it's going sideways in a range, about 400 pips of range. Cable is slightly more positive than the euro-dollar chart, and I think we are seeing sort of a push that is looking to hold above 140 big figure, pushing on 141 today. If it breaks out, we're looking at 142, and then the March highs of 142.45, and that's the way that cable is sort of beginning to progress. Dollar yen has improved as the dollar's picked up recently, and also the market has sort of moved away from its feelings that there's going to be an all-out trade war, so subsequently the safe haven flow has sort of looked to unwind on the yen. And subsequently, we've seen dollar yen rallying. 107 area seems to be pretty key for dollar yen. Is it going to sort of continue to hold a break above that? Is it going to continue to rally through 108? 107.90 is a big resistance on dollar yen. That is a level that needs to be broken to really start to gain traction to the upside. And also watch out for the Canadian dollar, which has had an interesting breakdown on dollar Canadian. Down below 128 figure, which formed a very well defined head and shoulders top pattern. Actually implies around 325 pips of further downside in the coming weeks. So if we do see a NAFTA trade deal in the next couple of weeks, which is perfectly possible according to Donald Trump, we could see some sort of traction to the downside on dollar CAD. Now, in terms of equity markets, these are the main markets where we have seen some sort of movement from the trade dispute between US and China. We've seen sentiment back and forth. Subsequently, we've seen equity markets higher and lower. And what we saw on Friday, the market's sharply down on Wall Street. They're rebounding on the futures today, and it'll be interesting to see if they continue to sort of fly around. But if you start to see the markets settling down in terms of its outlook for the resolution of this trade dispute, then you're likely to see a rebound again on equity markets, because that seems to be the way the market is going. In that instance, you'd be looking out for markets such as the DAX, I think, to rebound and outperform. And it's interesting that the Wall Street indices have sort of started to underperform a bit. We're going to get moves coming through from earnings season, which is just in its infancy, coming up through this week. So let's look out for that as well. But at the moment, we're seeing the DAX rebounding on Monday morning. Will that continue through these key levels that the markets are looking out for this week? In terms of commodities, we've seen the gold price, which, as I said, has gone nowhere. Very much range bound, very similar, I suppose, a way to euro dollar, but very much range bound in terms of between 1300 big figure support, 1366 resistance. Not really showing a great deal of direction on the technicals either. So I think that, again, we're sort of looking for a consistent run of either the dollar strength or the sort of gold price sort of starting to break down below 1300, and that could start to be the directional call if we do see the dollar strength. To watch out for that. Now, in terms of oil, we've seen a bit of a correction back on oil in the last couple of days. Again, it's a market that has been flying around on the dispute of trade between US and China, and it's interesting that the uptrends are being tested, but can they hold? At the moment, you're getting a bit of volatility, as ever, continuing through the weeks on the EIA inventories on a Wednesday. Watch out for that. But it's interesting that the oil price is still holding up on supports. Can that continue? So for the rest of this week, you're sort of looking at just a handful of issues, really. You've got Chinese inflation, Chinese trade data this week, two factors that are going to drive a bit of market risk sentiment. You've got the US inflation on Wednesday, but also the Fed minutes on Wednesday as well. Unlikely to see a great deal of volatility on those Fed minutes, unless there's a big decisive sort of move on from the FOMC on inflation. But I don't necessarily think that is the case at the moment. But it could be some surprises in those minutes potentially. But other than that, I wish you good luck in your trading this week, and I'll speak to you next time. Thank you.